You can go ahead and start. Wonderful. So welcome everybody to our first monthly member meeting. For those that just joined, I'm Erica Smigelski, and I am on the board with Claudine, our fearless leader, as the president of NAWBO, the San Francisco branch. And I am leading the digital programming. And this year we are trying these monthly member meetings. We know in-person meetings has a richness to themselves. And we also know that sometimes just schedule-wise, it's so much easier to commit to an online meeting. And so this is our first meeting where we are focused on the tax landscape. And we have Angie Bhasin with us as our tax evangelist who brings such lightness to a topic that can be really heavy. So I'm going to give you a little bit of the purpose of these meetings going forward. It's really meant to be a dynamic, conversational, interactive meeting that each one is meant to really empower and help build connections and to educate you from your community members. So other members of our community are invited to come as speakers. And on occasion, we may have someone come in as like an inspirational speaker that may or may not be an existing member, but it feels so delightful to have them that we're overlooking that. So if you know of somebody who might be a brilliant guest to have on, you can find me on the platform. And I just realized here I should put on here ways for you to connect with me. I'll drop it in the chat once Angie starts. So you can email me with anyone you have, including if it's yourself. So that said, here is the lineup of how we'll spend our time together. The first being an introduction. Hi, thanks for putting on your screen. We love seeing faces. That said, of those that I can see, raise your hand if you've been a member of our NAWBO San Francisco Bay Area branch for under a year. Awesome. What about over a year? And who, I'm super curious, is who's not yet a member, but might consider it maybe after this? I'm kind of curious. Wonderful. Welcome, welcome. Whether you're a member or not, we are thrilled you are here. And there's a small little share that we'll do here briefly. And since we're such an intimate group, we won't do breakout rooms. We'll just kind of go around and share. Is to build connections, because that is really important to our branch. And then we'll make sure we pivot to Angie and have her talk about tax planning and some strategic tips for us and things we can expect that are different because of changes going into this year. And then we'll wrap up with optional networking. And what that means is if you have to drop at the top of the hour, we get it. But if you can stay maybe 5-10 minutes, we'll just leave this open and we can either continue on some of the connections that might have been made or even just have more of a dialogue on the topics that Angie covers. So that's how the flow of these meetings will be. And so for the creating connections piece of this, I'm going to turn off the screen share and just make it real here. Oh, my hand's raised. Zoom is so funny. So I'm going to invite you all to think for a moment back to when you were maybe 6, 7, or 8 years old. And just think of those times when you just lost your sense of time and notice, like, maybe, or kind of recall the things that you were doing, the people you were with, maybe what you were wearing or what was around you. And oftentimes that memory is an indicator of one of your gifts you have to offer this world. And so I am going to invite each of you to share what that is to your level of comfort, knowing this is recorded. And have that be an invitation of how that has been integrated in the work you do today. And if it's not in the work you do, then how you're bringing that into your life, because there's probably some great reward in weaving that in. So I'll start to help you to set the tone. I need to lower my hand. Okay. So when I was younger, I loved it's be really vulnerable. I loved like organizing things, whether it's my bedroom or it was my stuffed animals on my shelf, the games, my books that I'd like to have them from really tall to go lower and lower. And it could even be planning something. Like if it was my birthday party, I wanted to have this happen and these people come. And it was just a lot of the planning part of it and organizing of events, especially when it pertained to me, that I really just lost the sense of time. And so when I think of that in the work that I do today is, I do help businesses, get themselves organized to lead their big ideas forward. And that's something that I also love to do just in my own home. Sometimes I just need to organize something to feel like I have the space to do whatever I'm moved or called to do. So my favorite pastime was organizing, and I know this feels really nerdy, but I'm owning it, and that is what I do as my profession as well. So anyone want to volunteer who's next? And you don't have to if this just isn't landing for you, that's totally okay. But I would welcome someone to just turn your mute off and participate.
I'll jump in. Oh. I'm a chatty Cathy, so I'll do it. First of all, my name's Carrie Franz, and I'm a fractional chief marketing officer. And I think the times in my life where I was happy or really resonated that really come forward, very disparate to what I do now, but I used to be a ballerina. And there was something about going to class every day and having the discipline of going to class every day and honing your skills to truly become your best possible dancer, right? And to be completely balanced, actually, on both sides of your body. So you can do those pirouettes on both sides and all of those things. And then being ready for performance. And the bravery that it took to actually perform in front of hundreds of people. And I think where that has brought me to today is that knowing my craft of marketing and honing that over 30 some odd years and continually learning, and then bringing that all that knowledge to my clients. When I bring on a new client and have to present to them of what I think their growth plan should be and how to lead a team. Those are all things that the confidence of being a dancer and practicing that art, believe it or not, and that poise truly does help me in my business life today.
Thank you for that.
Sure.
Beautiful. Angie, I saw you were going off mic, and Claudine, Angie, why don't you go real quick and we'll hit Claudine and see if there's anyone else that wants to share before we move along.
Thank you. I wish I could say something so interesting as you guys, but I was trying to think about, first of all, I have very little memory of my childhood, which is sad sometimes because I don't remember a lot of things from my childhood. But as you started talking, I know reading was always something that I could just spend hours in. And trying to make that connection, as you said, wow, that's kind of what I do now, right? Yeah, and that time it was reading Enid Blyton's and at 5 or 6 or 7 years old, and now it's tax law. But reading has been, I'm just so fascinated. Like, it's not just learning to dance, right? I mean, you learn to dance, but you learn so many other skills.
Absolutely.
Exciting.
Yeah.
Yeah,
Yeah.
great
And
topic.
and leading feeds that curiosity. So
Yeah.
that's very relevant. Claudine, how about you?
I think Minako had her hand up before. Minako, would you like to start first?
Sure. So, I'm from Japan, and the animation comic book, manga comic books, and anime, right? American said are
Mhm.
very, very popular, and I love reading, comic books, and I had a small allowance. So how can I save or manage to buy comic books every month, or I have particular kind that I wanted to buy, like monthly, weekly, that kind of, anyway. So, and then also like long, long hours, just reading, 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 reading. And then I kind of forgot about, the dinner time and stuff like that. So I am a CPA, accountant. So I think now I know how to manage, how to save money to buy what I want. And then also I can focus on something like a long time until I solve the problem. So I think definitely, helping my career.
Wonderful. Wonderful. Let's get one or two more.
Hi, my name is Claudine. I grew up in a pretty conservative Chinese family in Singapore. So, but I call it rebellion, call it curiosity. I'm probably if you ask my mom, I'm probably the nightmare child that that anyone could have. I probably did every single thing that's not supposed to do. Married the first white guy in a Chinese family. Brought the first white guy home. Moved out of the house. Lived overseas for since I think since 2003. I think we've been living outside Singapore. So I have this, I want to say, sense of adventure and the need to do something new all the time. So I'm very passionate about small businesses, especially owned by women, because I think we have such a big voice. We have so much talent and skills, that we have that we can share. Especially, and this is a perfect platform to share with with this group too. So I think hopefully this sense of adventure and look forward to having new interests and new excitement will continue and go along with me for a long time.
Oh, I love that. So does Susan. Does anyone have like a minute or two that they want to give a share? Moja, Susan, no pressure. Oh, you're muted, Moja.
Sorry, I'm on my phone listening. My memory that comes up for me is I love to play. And there was a friend in where we lived at, and she had strawberry shortcake playhouse and all the things. And I did not go home on time. So I just enjoy, having space for that when I was younger. I think I was probably like 8 or 9. And I think how that resonates with me now is as a coach, just helping people find, fun and enjoyment and fulfillment in their own life. So just being able to,
Hi.
spend time for fun and play is so important.
Yeah. Thank you. Wonderful. Well, let's pivot to taxes. And Susan, if you feel so moved at the end, we'd love to hear what moved you, or even Suzanne. But for now, I want to introduce you all to Angie. And I have my notes here because like I said, she brings a lightness to a heavy topic. And she just is really kind of a trailblazer in this realm of tax planning. She is a certified tax strategist, a CPA, so there's some commonalities here in the group. And she's really about helping people to look at taxes in a proactive way, especially planning for executives and high net worth individuals, not just here in the Bay Area, but nationwide. And she's dedicated so much into this beyond just the office. She's passionate about educating on the power of being proactive with tax management. And so much so that she's a speaker on this. She's an advocate behind it. And she's just so wonderful as a person and a being herself. So I'm so excited to have you, Angie. So take it away. Oh, you're muted. There you are.
Awesome. Okay, thank you so much. That was such a generous introduction. Let me just share my monitor so I can kind of go through that with you. I'm really excited and honored to share my expertise and experiences with you all. And, I'd love to hear about your businesses. So I think in the light of time, I'm going to go through and share some highlights, some actionable items that you can take into your businesses right away, and then give you some next follow-ups and share a couple of new laws that are applicable for this year. So they're on your horizon. Right. So let's just dive into it. I always like to say, this is where we're really talking about creating your financial future. And really, excuse me, I was away to India and I got back last week and I brought back the pollution in my lungs. Delhi was so bad at this time. So excuse my cough. Really, the best way to predict the future is to create it. And it couldn't be more true with taxes, because when you have the blueprint of a tax plan and when you're implementing the plan, you have short way of, exactly what you're aiming for. Versus, like you could spend valuable hours in advertising, which is which I think is a great way to build up your revenues, but you don't know what the results will be, right? But when you're working with a proactive tax plan and the blueprint of a tax plan and implementing it correctly, you're guaranteed those savings. You're really carving out those savings intentionally from the code. And like you said, I am really very passionate about this. And you'll see, we're a boutique firm. We don't work with hundreds and thousands of clients, but I'm really, really passionate about educating folks on this. That's my bio, about me. And of course, I have to tell you this is not tax advice, because this is only for educational purposes. But I will tell you in the end, next steps, if you would like to schedule a meeting for a complimentary tax assessment, and I'll let you know what that means. I'd be happy to do that. This is a pain point. Taxes are our biggest expense. And I'm not saying don't pay your taxes, right? That's not what I'm advocating. What I'm saying is pay your fair share of taxes. The Internal Revenue Code has pages on pages on how business owners, especially business owners, can take these deductions to drive their taxable income down, because quite honestly, Congress incentivizes businesses for taking risk. So most of the tax code is derived towards, applicable towards business owners to reduce your taxes. And I can bet you, we all over here would be raising our hands if we unmuted ourselves, or, that's what the topic is today. And that's what we're going to talk about: strategies, actionable strategies that you can take away today. Obviously, we have a very limited time period. I'll talk about a few, but just know that there's hundreds of strategies and thousands of combinations that are available. Obviously, every tax plan, every situation is different. So they all have to be looked at an individual level. But I'll talk about a few today that you might be able to implement in your business. And I'll talk about the mistakes that I see every single day in my practice, which is leading to unnecessary overpaid taxes. Statistics show that a small business owner in general is leaving about $15,000 on the table in overpaid taxes because of no planning. in my experience, I have seen sometimes hundreds and thousands of dollars being left in overpaid taxes. We onboarded a client, I think it was around summer of last year, new client. And one of the process that, well, this is a good time to talk about it. What I do is when somebody reaches out or they're referred to me, I always review their prior year's tax return for two things. One, of course, that gives me the lay of the land, right? What is the income and deductions layout? Secondly, it is to review for mistakes and missed opportunities. Invariably, I cannot tell you how many times I find mistakes that our clients are able to some amend and get refunds even before we start working together. Or even if we decide not to work together, I've just made it a part of my offering that I review the tax returns for that purpose. Last year in summertime, we onboarded a client. When I reviewed her returns, she had overpaid her 2020 and 2021 taxes by $89,000 and $92,000
No.
each. And this was, she was coming from a pretty large firm. And this actually, quite sadly, did not even relate to planning. It was just, in my mind, blatant omission to dig deeper what the business was, what deductions were available, and that costed her so much. So I'm going to talk about a few of those things that I see. So anything that resonates with you, if you want to just ask questions as I go, you can do that. Or if you just want to put them in the chat and we can address that later, either ways is fine with me. Confusing tax clients compliance with tax planning. I see this all the time. I hear this all the time. And Minaka, you would understand what I'm saying. When people bring in their tax data to get their taxes prepared at the beginning of the year, they think they're getting planning. They're not getting planning at that time. It's too late to be planning at that time because the planning has to be proactive. So, you know, I started off. I should have mentioned in my bio slide. I started off as a traditional CPA, and as CPAs, our training is to be historians, whether it's recording historical data in terms of bookkeeping and accounting, or putting numbers in boxes and preparing tax returns. Right? Our education and our training is not for planning. So, you mentioned my other credentials, so. Over the number of years, even though I started off as a traditional CPA, I realized pretty soon that I needed more to help my clients. Often clients would ask us for tax saving strategies, and we had a handful, typical that we know, but that wasn't enough. And oftentimes, working at large firms and small firms, both, even the partners at sometimes would say, oh, you just made more money, so it makes sense that you pay more in taxes. No, that's not true. I mean, look at the billionaires, look at the big corporations. They make so much money, and the code is the same for all. It's not just there's a different code for big corps and a different code for smaller corps. So that's kind of why I dove into learning about more tax strategy, and hence I'm a certified tax strategist. We're about 400 of us in the whole country. That's what the passion is. My passion is to help business owners drive their taxable income down, not just figure out how much tax they're going to pay. So do not confuse that tax compliance, tax filings is going to involve planning as well. And of course, Chief Justice Rehnquist also said there's nothing wrong with the strategy to avoid the payment of taxes. Certainly, if you overpay on it, like my client who overpaid $89,000 in taxes, did you think that IRS was going to come back and say, oh, no, you forgot to take this deduction, you should do this? No, it's our responsibility to be more on top of our financial situation. This is just I know we have very limited time, so I'm kind of gonna go fast through some of the slides. And if there's anything you want me to go back to, you can let me know. This slide basically talks about the difference between, you know, talking about how the tax code has red lights and green lights. Red lights are basically, you know, provisions in the code which impose a tax, right? It's like whether it's a self-employment tax or it's an income tax or a net investment tax. And green lights are really places where you can kind of see, okay, how do we strategize differently? How do we maybe restructure differently to take advantage of the code in our situation? So let's talk about strategy. So now there's different boxes, different buckets of tax strategies. There's timing strategies, which would be, you know, like most of us have, like deferral strategies, 401k, you know, you're deferring, you're getting a deduction in this year, but you're going to pick that up in income at a later time. So depending on, you know, where your tax bracket is, I've often seen this, folks with maybe at a 10% tax bracket, opting for 401k deferrals, which is not really, you know, if you're just starting out and you are in a smaller tax bracket, you want to be contributing to a Roth instead, because you're at this lower tax bracket right now, and you anticipate in retirement you're going to be at a much higher tax bracket. You don't want to be in a deferral situation right now. So things of that nature. We had actually had a client, a very successful client. They're in the staffing industry. They generally have about $2 million of net income every year. So happened last year, because their AR was higher and, you know, they had made some investments in the business, they ended up in a very low income situation. That was a perfect time. You know, even though every year after year, we're always helping them strategize to lower their taxable income, to help with their taxes. Last year was the one that we flipped. You know, this was a great year for them to convert some of their deferrals into a Roth IRA and create that tax-free retirement income. So it's just, there's just so much. That's why I love planning so much. There's just so much you can do to help client situations. Then income shifting strategies, you know, this is something that it's, time permitting, I'll talk more in depth about it, but just a high level. If you have kids that can help you in the business, it's a great way to shift income from your higher tax bracket into their lower tax bracket. That's just on the financial side. Then they take their money and they put that away in a Roth. Whoa, now that's powerful. You're starting their Roth now. Imagine over the number of years where that's going to land up at. Not only that, I mean, I think financial benefits aside, just the fact of having kids start working in the business, I think it has so many non-financial benefits. Teaching them money doesn't grow on trees, right? Having them fund for their interests or their hobbies or their expenses. Sometimes education, like if you have a kid in a private school, that's a great way to get a tax deduction for that. So things of that nature. Code, of course, then there's code provided strategies. Oh my God, those are the beautiful ones, because that really lets you take advantage. You know, this is what I was saying. As a CPA, we had strategies which really at the very core meant shelving out cash, right? That's if you're ever talking to your CPA and it's like, oh, buy an electric vehicle, buy a vehicle, buy some equipment, put away in a retirement plan. All great. I mean, nothing wrong with that, but only if you need to buy a car, not for the sake of getting a deduction. Do you want to shelve out that money? So code provided strategies are like straight up. I'll give you an example. I was speaking at a realtor's conference. This was a couple of years ago. Well, no, this was pre-COVID when it was in-person conferences. And after the conference, this realtor came up to me and we were talking. And as she was telling me about her business and her life, it turned out she had a special needs child that she was paying huge amounts of medical costs for, and this was not covered by insurance, and obviously this was not a business expense. So as our process, I asked her to upload her returns. We got around to talking after that and finding out more about her goals and her needs, and to see what we could help with. We were able to structure her business in such a way that she could deduct all of that. I think it was over $60,000 of out-of-pocket medical costs from her business. That's valuable. That's super valuable. And had you, just been focusing on getting the returns prepared and not thinking what else I can do to make my expenses that I'm paying with after-tax money, make them more tax efficient, and be tax deductible. Unfortunately, as CPAs, our training does not provide us that education, but that's why I'm so passionate to talk. And product-based strategies are exactly what I just said, maybe a retirement plan or, anything that you're shelving out money for. Another big mistake I see, which I really want to point out, is being in the wrong business entity. I see this so often, and this is the number one opportunity I see that can help you mitigate your taxes. Most businesses would start off as sole proprietors, right? But as they grow, they will, by default, folks will say, become an S corporation. Now, sometimes S corporation is the right fit, but analysis really needs to be done in order to figure out if that is the right entity for you based on your business, based on your situation, and based on your goals and needs. It's by default, it's not. And the reason, why folks would say S Corp is you graduate to an S Corp. I'll just briefly talk about these different entities, and then if you have any questions, we can address those. In a sole proprietorship, you have two forms of taxes that you're paying. You're paying income taxes on the income, and you pay self-employment taxes on the income. By incorporating and being an S corporation, what you're doing is you're reducing the income that is subject to self-employment tax. So you're going to take compensation from the business, and then it's a flow-through entity. So the income flows through from your business to your personal return. You pay taxes on it, but then when you take money out from the business, it's tax-free. You get tax-free distributions. And a C Corp, in contrast, is a separate entity, gets taxed at the separate entity level, and pays tax at that level. Also, but when you take money out, then you're subject to double taxation. You may have heard of that C Corp double taxation dilemma. And so, partnership kind of works similar to S corporation. So very important to get that analysis. When we do a tax plan, that's the very first thing I address is the optimal entity, because oftentimes people are not in the optimal entity, or even if you were in an optimal entity when you first started your business, you may not be now. So actually, for several reasons, maybe your business is different now, or the tax law is different now. When TCJA, Tax Cuts and Jobs Act, was passed in 2017, it really created this dilemma of the optimal entity, and we had several clients that had to reanalyze their situation, because C Corps prior to that were taxed at a very high tax bracket, and now they're at a low 21% tax bracket, a flat 21% tax bracket. So that brings up opportunities for you to explore. Obviously, I'm not, I can't make experts out of entities right now, but I just want to throw it out there. So it's on your radar. We'll kind of go through all of this real quick. Going back to TCJA, when TCJA was passed and C corporations were given that flat 21% tax bracket. I'm sorry, Erica, do I have, how much more time do I have?
Well, about 10 more minutes, maybe 12 if needed.
Okay, sounds good. So when TCJA was passed and C corporations got a flat 21% tax rate, in order to compensate the flow-through entities, meaning the S corporations, the partnerships, and the sole proprietorships, what the Congress did was they gave what is called a qualified business income deduction, which is 20% of your of the pass-through income you get to take. Of course, it's subject to limitations and there's criteria. This has been one area that we have found so much money left on the table because either the correct income was not, the correct deduction was not taken, or another part of this is there are certain industries that are that get capped for how much you can take as deduction. Attorneys, physicians, accountants, to name a few. And so a lot of times we've seen folks miss out on this business income deduction just because of ambiguity, whether they fall under that or not. So going back to the client I was talking about, that was exactly the case. The prior CPA firm did not dig deeper into what the business was doing. You know, their tax return had law in the description, so they just went by that. But this was not a law firm. They were supporting a law firm. So they didn't dig deeper into finding out what does this business do? How are they earning their money? And are they exempt from this, or do they qualify for this? So, I mean, that's just one of the cases. See this a whole lot more than I'd like to see. I'm going to go real quick because I do want to get towards the end where I'm going to share some exciting news as well. Wrong retirement strategy. I kind of alluded to that, right? If you're in a smaller tax bracket right now, you don't want to be kicking the can and putting in deferrals, right? Deferral strategies, whether it's a 401k deferral or if it's a any other retirement plan. You're okay to pick up that income right now because you're in a small tax bracket in comparison to when you will, when you retire, you may be in a higher tax bracket. Well, tax rates are at sale right now anyways. They are going up. We all know that. So making sure, you're picking the right strategy for retirement. And there are so many ways that you can put away in a retirement. I always tell my clients, you focus on bringing in the money, right? Being the rainmaker and building up their money. And there's so much we can do in terms of making sure that the taxes are reduced, your taxable income is reduced. There's abundant of advanced strategies that we can employ, including putting away for your retirement and big amounts for your retirement and creating assets. So that's, we already talked about that missing medical deductions. That was where the client was able to write off the out-of-pocket medical expenses. So the way this happens is it's under Section 105. In the right kind of entities, you can adopt the plan medical expense reimbursement plan, whereby any out-of-pocket medical costs that you pay for yourself and your dependent, that can be written off by the business. Of course, you have to do it right. All of those steps need to be taken, but that is a possibility. But it is not available in all different business entities. So that's why when we do the business entity analysis, this is considered a whole lot. What are your expenses that you are paying for with after-tax money? Okay, so I'm going to quickly just jump on this. Health insurance premiums. I see this mistake a whole lot. When you are more than 2% shareholder in your business, and you're paying for your health insurance, there is a right way and a wrong way to report this so that you can get a deduction. And the right way is to make sure that those health insurance premiums go on your W-2, gets picked up on your 1040, your personal tax return. Excuse me. Because what happens, you would think, oh, I'm picking that up in income, so it's just a wash. But if you pick that up in income, you make an adjustment for it on your 1040, but then you get a deduction on your business account. I see this not done right so many different times. We actually, the way we work, we're sending out. And oh, by the way, if you'd like to get on our newsletter or tax tidbits, just email us and we'll go ahead and put you on our campaign list. This is something we make it a point to send out in December, because when you're about to do your W-2s in January, you want to make sure that your payroll company is reporting this correctly on the W-2. Pass-through entity tax, we're not going to talk too much about this. We don't have time. This is a full 2-hour webinar. We've done any of these webinars. I do a lot of webinars and seminars. So get on our campaign list and you'll be reminded of those. This is a workaround. We all know about the $10,000 limitation to deduct our state and local tax and property taxes on our personal tax returns, right? This is a way to work around that. A lot of states have come up with a way to be able to get that deduction in. So California actually came out with this solution 2 years ago. And what that allows is if your business elects, if your S corporation or partnership elects at the entity level to make payments for you for the tax that you're going to be owing on the business income, then you get to deduct it on your personal return. I'm just going to go real quick through all of this because I do want to get to something that just passed this year and what may be passing soon. So that is exit planning. Do not overlook exit planning when you're ready or you're ready to think of selling your business or a property or anything. That brings in huge tax consequences. Do not overlook that. And it's way better to plan for it proactively before that event happens rather than after. After the event happens, you're really locked in, and most times you cannot do much. There are still some options depending on the situation, but most times it's too late to do anything at that time. Corporate Transparency Act. This is what I wanted to get to. We have a full 1-hour webinar. If you want to get more information into this, just email us and we'll send you the recording. So as of January 1st, 2024, FinCEN, not the IRS, FinCEN has made this a mandate for all businesses. All businesses have to report their beneficiary ownership to the FinCEN. Now, it's not a requirement, ongoing requirement every single year, and you'll find the details in that webinar. But every business, if you have been in existence before January 1st, 24, you have until December 31st, 24 to file this with FinCEN. Any business that's created after January 1st has 90 days, I believe. They were working between 60 or 90. I think it's 90 days for any business that started in 2024. And then any business that starts after December 31st, 2024, it's 60 days. You have to make that information available to FinCEN. And there's huge penalties if this is not done. So even though this is out of the tax arena, I did want to make sure that you're aware of it if you're not already aware of it. And like I said, if you have, it's a one-time requirement for an existing business. And then whenever there's any change in the information, then you have to file that change of information with the FinCEN, and you can get more details about this.
Angie, before you move off of this, someone had a question of who sends this information?
The
Is it
business. Well, great question. So your CPA can prepare it if they are preparing it. Attorneys, you can get attorneys to do it. You can do it yourself if you have all the information. A lot of CPAs are not preparing it because the E&O is not covering it for some reason, because it's kind of considered to be practice of law. And in California, you cannot practice law without a license. We've actually partnered with a firm that we refer all these cases out to, because this is what they do day in and day out. And because some of the information is so time sensitive, you really do want to be on top of it. And like I said, if you have been in existence, it's a one-time filing. But if you have any change in that information, that has to be filed, I believe, within 30 days. And huge penalties attached to that. I'll get to my last one. There's good news. There is a bill in the House, well, it's in the Senate, that is, bonus depreciation, if you're aware of this, was going down. It was phasing down. It used to be 100% in 2022. It went down to 80% in 2023. 2024 it was going to be 60%. But there's a bill in the Senate. House has passed it. It's sitting with the Senate. Senate is at recess, of course. They always find ways to make our lives so fun at tax time, because now we're in a rush to file tax returns. But if this is applicable, we don't want to file tax returns and not take advantage of that. So then our goal is to just get everything done and ready, and then wait for them to sign, and then we can file the returns. But the bill is retroactive to 2023. So any assets that you bought in 2023 would still be, if they're bonus eligible, you would still be able to get 100% bonus depreciation. That's a huge deal. One of the other provisions in that bill is the R&D credit. If you're aware of how R&D credit was hit really bad, because used to be you could expense out the R&D expenses, but then they said, no, you can't do that. You have to capitalize it and then amortize it over 5 years. But this bill we're hopeful it will fix it, because that really did hit a lot of businesses. So very excited about that. I think I'm about ready. So what do you need? You need to take a holistic top-down approach to your finances, get comprehensive advice, and then implement that advice, and then have an ongoing review. If you'd like for us to look at your tax returns to give you a free tax assessment, I'll be happy to do that. You just email admin@FinTaxCPAs, and we can take care of that, because I love to hear about your businesses, what you're doing, and if there's any way I can support you, I would love to do that. Plan, 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 my motto.
Angie,
if
we
you'd
had a
like-
couple questions.
Yes,
Oh,
let's
there's
go.
the email, maybe that you can repeat the email again, but maybe the two questions. One was, can you touch on the fee, like typical fee in order for that the CTA, I think it was, the fee for getting someone to do that? Like what ballpark figure to help?
It depends. It really depends. So what I would advise is get your data together. Well, my first advice is to go let us know and we'll send you the recording of that webinar because that will give you a lot of details. As far as fee is concerned, I believe oh gosh, I don't remember top of my head, but the firm that we are referring out our clients to is, I want to say they're about $1,500. Don't quote me on it, but it could vary, right? It could vary how many businesses you have, how many owners you have. And remember, it's not financial owners in the business. That's not what they were very intentional in saying beneficial owners. So it's not really if you have a business and you're two partners or you're two owners. It could be, there's a whole wide range of who can be a beneficial owner. So it depends on because there's details, there's compliance that needs to be done for each of those. So to answer your question, it could vary. I would probably reach out if you'd like us to give you that. I don't remember the name of the firm, sorry, but we can provide that to you. Any other question? We can look in here.
There is one, maybe you can talk on it. Carrie had asked about it regarding the partnerships are like an LLC. And I recall you saying, Angie, that the tax benefits of that entity are similar to an S Corp. Is there anything unique about an LLC that's worth noting here while we have a couple more minutes before folks might need a drop?
Sure. So what I meant over there in that slide is it's a pass-through like an S corporation. Tax-wise, it's taxed in the same manner that the partnership itself doesn't pay taxes. The income flows through to the partners 1040 and that it's paid there. However, there are differences between S Corp and a partnership. I will tell you, we've actually worked with several partnerships. And we ended up, after analysis and after doing the tax plan, we ended up changing that entity. Doesn't mean all the time. I mean, I have several partnerships that are perfect as partnerships, but again, needs to be looked at to see whether you are in the optimal entity or no. I hope that answers your question.
Yeah, it does.
Great. So I know we are at time, and I dropped in the chat that you're welcome to stay another 5 or 10 minutes to either continue the questions with Angie or to pick up on the meaningful connections. But before you drop, I invite you to pencil in your calendar that we are meeting on the 3rd Thursday of each month. So that is our monthly meeting cadence. So you could pencil that in your calendar and get more info coming. And meanwhile, I'm just going to open it up. I see that we have someone.
Sorry, I just saw, sorry to interrupt. I just saw my website put in there and there was the S missing. So I just reposted my website in there.
Okay. And feel free to get off of your mic or off of mute, and you can ask some questions. I see someone's wondering if they have a bookkeeper you would recommend.
Yes, so shoot me an email and we can talk about that. We don't do bookkeeping in-house because we're primarily tax compliance and tax planning, but our sister firm is the one that does the bookkeeping, and they work very closely with us. So it's kind of like being in the same house, but it's managed in a different entity. And most of our clients work with our sister entity for bookkeeping, because sound books are the foundation of good planning and good compliance. So it's a requirement to have good books.
Yeah. I know we all have full calendars, and so if you need to leave, by all means, we understand. And Claudine, maybe you can unmute yourself and just talk about our next in-person event for those that might be interested.
Thank you for that. Oh, this is such an amazing webinar. It was so interesting. I kind of also regretted attending because now I know much more, and I think there's some things that I shouldn't have done now. Thank you, Angie, for your time. We appreciate it.
Thank you. Thank you very much.
To tie in with this event, we have a goal-setting event in the city on April, what did I say? February 26th. So that's in the city. The link is up there in the chat. So feel free to join us. We also have an event planned on Earth Day on April 25th in the Salesforce location. So the details will be up soon. So it's something that we can all look forward to again.
Wonderful. Well, thank you everybody for joining. And Suzanne, you're welcome to stop the recording and we can just have a conversation if need be, or I see you need to go.